Good morning, RUX, YouTube, and wherever you're watching this. Thank you for joining us for another broadcast. For those of you new, this is exactly the process we go through every single morning at Investors Underground. And after a day like yesterday, I wonder what we're going to talk about today. Just before we get started, this video is for information and education purposes only. If you're happy with that, then please stick around. If you're not, then we'll see you another time. Right, without any further ado, let's get stuck in. Nate, take it away.
What's happening? All right, so busy day. Obviously, we have SPY in a complete meltdown. We had a nice meltdown after hours. I participated into the close, which it kind of sold back off into that 558 level, which we were watching yesterday. Obviously, tomorrow we have CPI. That's going to be a market mover. Which way? We don't know. And I think the biggest thing that you need to focus on in this market is just waiting for the proper setups. And that includes being a little bit more patient off the open. And if it's not an A+ setup off the open, meaning, something's gapping up, it has some sort of parabolic move and you can react, there's no real point to getting too aggressive off of the open just because tape is so thin. It's best to kind of let the market determine which way it wants to kind of go for the day. And it's going to allow you to maybe have a more macro, more clearer picture. A lot of times when you get too involved too quickly off the open, you just kind of in wait and see mode with a position on, and you end up wasting your day, and you might even be carrying a bias because of the positions that you have on. So for me, I already sold those gappers that I had posted that I bought at the end of the day. But this morning, I'm hopeful that we have some sort of big flush using those after hour levels as sort of a guide. So ideally, that is the bottom for the short time, for the short term. And ideally, we have some sort of flush where I can start to accumulate some of those same names versus that after hour low risk. If that sets up, great. And the biggest piece of trading a reversal is to not size in going down, right? Like Lance a lot of times talks about the right side of the V. And that is probably the most important part in this type of market. Otherwise, you might be sizing too much too soon. You could be absolutely right, but you might be there a little bit too early, and that's wrong. And a lot of times what happens when you're a little bit too early, if you get saved, you end up exiting for flat. You're just thankful to get out, and then you miss the entire move, or you end up getting run over because you're putting up too much conviction on the front side of the move. It's no different than just stepping in front on the short side and getting blown out. You can do the same thing on the long side. Nothing has to bounce when you think it does, and nothing is down too much, especially when markets end up being exceptionally thin. So typically in these markets, and anybody that's been in IU, I typically create baskets. And so, for example, if I'm trading the SPY, the focus for me is something like SMCI, NVDA, and Palantir. So those are going to be the names that if I think SPY is going to bounce, that's where I'm going to focus. I'm going to be looking for opportunities on SMCI, NVIDIA, and Palantir using levels from prior days as the guides. And what I look for within that basket is which ones are staying relatively strong, which ones are relatively weak. And depending on my bias, if I'm short, I want to focus and scale more on the relatively weak ones. If I'm long, I want to scale more on the relatively strong ones versus their peers. And in the same kind of concept with Bitcoin, which has been a really good read lately. I've been trading a lot of Mara. I've been trading a lot of MSTZ. So MSTZ, if I short it, it's the same thing as going long, something like MSTR. So my basket for crypto is essentially Hood, Mara, and MSTZ. Those ones I will look for which ones I have the best feel on, the best setup, something that's a very clean failed follow through type of setup. And then the last basket that I've been trading in this market is, sort of the China basket, which is JD, XPEV, and BABA. And these have been fantastic. We obviously have some nice gaps this morning, but typically I'll be looking for which ones are behaving the best If I'm looking for a long bias or a short bias, whatever way I'm focused on, I want to look for the cleanest chart with the best setup. And out of those three, I'll decide which one I'm going to put the most risk on. Maybe I start into all three, but I only end up scaling, BABA because it was relatively weak yesterday versus some of the other ones. Then as XPEV starts to join, obviously I would scale into that. So that's how I trade these markets. I think it's very important not to try to pick bottoms. If you are anticipating a reversal, you should never be full size. And really, it's about seeing that first higher low. Let it reverse. And, one candle does not mean it's a reversal. Let it swipe up, let it pull back, and let it put in a higher low. And then that way it gives you something to risk off of. If you don't allow that, you don't know where to stop. You don't know where bottom is, right? And it still may create more lows. There was 3 opportunities yesterday on the SPY, which had a reversal. First time was maybe 20, 30 minutes of a reversal. Second time was maybe only 10. And then the third time was obviously the big one. But if you didn't behave on the first 2, then you took yourself out of the game for the one that really paid in a big way. So it's very, very important if you go into a trade to make sure you follow the plan, the risk that you had going into the trade. Otherwise, you're going to end up in a very bad spot, and you might even take away that trade from yourself just because you're there too soon, you bought too many, you ran out of buying power, whatever the case may be. So obviously be cautious. And then the last one's just is from some add-ons for today is small cap land. I'm really not doing too much in small cap land except for some of these cheapy ones, which like yesterday, STSS was a beautiful trade. And for those of you guys that have watched video lessons or used to watch Sunday Scan when I did them all the time, this is a beautiful, and same thing with Emil. This is his IOD clear out move, right? You've got this nice VWAP hold, and then it comes back and it essentially clears out, blows out all the folks that were using, high day as a stop. And then it gave a huge unwind. And that was a trade that we took yesterday. I'd be looking for pops, versus maybe red to green today. And then obviously we have AWH, which ideally we have some sort of, pops versus the 40 level. I'd love to see a clear out off the open into 38s or something, and then stay as heavy at VWAP, and then potential patience under 34. I always try to look for a channel. Where are they supporting it? Where's the supply? And then that gives me a decent edge for the trade. So that may seem like a lot of trades, but really it's just 3, right? I'm typically looking, it's 4, but I'm typically looking for the best trade out of each basket. So I gave you a market basket, I gave you a crypto basket, and I gave you a China basket. And so depending on which one's set up, I'm going to take the best one out of each group. So that's really 3 main watches. And then, my cheapy one would be something like AWH. So that is what my focus is. And before we go to the other guys, one of the things we discussed last night is, when we run a sale, it's sometimes it works, sometimes it doesn't, right? But what we've realized is when we do the trial, when we give people an opportunity to actually come and see, a lot of people are stuck in like 2012 Profitly and just think it's like a me room or whatever. But it's a community, and there's tools, and there's scanners, and there's just so much more that we suck at showcasing what that is. And so we've just determined that it's just better to let people in, check it out for 2 weeks. And Sam posted a link in the description in the chat. But it's investorsunderground.com/volatility. And we've realized that we have such a higher conversion of people coming in when they actually get to see for themselves, and they don't need to take that chance. They can actually just see for themselves, check it out, and make the decision on their own. So that's it. Be cautious. Remember, CPI is tomorrow. And I think the only other one that I forgot to mention is ONDS, and we'll see how that one ends up today. But again, patience. Be cautious not to put your whole wad right in out of the open. That's when you get into trouble. let stuff happen, 9:45, 10 a.m., get a more macro view, let the market settle a little bit, and back to you, Sam.
Fantastic. Thank you, Nate. Great thoughts. Great thoughts as always. Thank you so much for sharing. Next, let's throw it straight over to Ariel. Ariel, take it away.
Thanks, Sam. Yeah, and kind of to follow up on a bit of what Nate was saying, with something like even Tesla, obviously, yesterday was one of those days, and really this is kind of what I was talking about on X. We want to start to see, some capitulation, and when this thing trades, 190 million shares on the day, it really looked like someone's trying to get their exit. So this is one that I would be comfortable potentially trying a mean reversion trade. So just, let it build off the open, give it a few minutes, because part of what we've seen is, in particular over the last 2 weeks, anytime we gap up in the morning, we're just met with then, all day selling. So I want to kind of have the market at my back. I'd like to see the market begin to push, maybe take out its own pre-market highs, and then begin to hold. If I'm going to play any of these mean reversion setups, typically for myself, I'm always thinking about, what group, similar to what Nate was mentioning, what group is holding up well for the swing side. And for me, that also continues to be the Chinese equities. You can just see here how BABA comes in to the sending 20-day moving average, and then, we just get another gap up overnight. So this thing continues to build out a really nice range. You get your move up, you get your move sideways, and that is completely healthy. It's just digestion after, a 70-80% move. Nothing wrong with that at all. And then a group that's starting to catch my eye are potentially some of these energy stocks. They're actually building large weekly bases. And meanwhile, crude has just been getting beaten up for a while. So, an ExxonMobil just trends basically off of the COVID lows until 2022, and then has just done nothing wrong. It has just gone sideways for the last 2 years. And then you can compare that to something like crude oil that, has its big move up into 2022 and has given back, gone down 50% effectively, and is now kind of resting at an important level, $65. We'll see if crude can hold in well, because it's not the only chart within the crude oil space that looks great. Obviously, Chevron's another one that's got a pretty wonderful weekly base. And I don't necessarily want to, quote unquote, have to own Chevron or ExxonMobil. I believe that they're a bit slow, but that could lead to another group that develops within the market, and then usually when you get your large caps moving, your mid caps and your small caps, your faster movers will come along. They'll develop. So just something to keep in the back of your mind as you're kind of going through the market and potentially keeping your eyes on crude. And then these drug pharmaceutical companies, right? The market has been effectively going down for the last 3 weeks. And since earnings, AbbVie has just been grinding higher, right? The market was going down yesterday, and AbbVie goes and makes a new all-time high. And it's not just AbbVie acting well right now. It's a Bristol Myers Squibb. It's an Abbott Labs. It's a Johnson & Johnson. So again, they're not the sexiest names, but if you are more focused on things that are going up versus looking for the lows on something, drug pharmaceuticals, Chinese equities, potentially some energy names, there are places to be that isn't just, pigeonholing yourself to, Tesla or an NVDA or, these software stocks. It's like, kind of broadening your, your playbook, the amount of stocks, your universe of stocks that you can trade. And, we do have groups that are acting well despite the market going down. And so that's, something that I always want to make sure that I'm focused on, because when the market is done going down, that doesn't mean that then these are going to start to go down. No, these are already in established uptrends, and established uptrends can last a whole lot longer than people realize. Sometimes they last for 2 years. If you just go back and look at an NVIDIA, they can last 2 years. So just something to keep in back of mind. Energy stocks, Chinese equities, and these drug manufacturing companies, I think are really good places to just make sure you have an eye on. And, when the market turns, or when they're, done consolidating, these are really the places that you probably want to be focused on going forward. And that's it for me, Sam.
Magic. Thank you. And last but certainly never least, Stan, take it away.
All right. Very good. Very good. Thank you, Sam. Good morning, guys. Good morning, everyone. We have Tuesday, March 11th, and let's just take a look at a couple of these charts and see what we can make sense out of them. So the first one that I have on watch is Reddit RDDT. As you can see, pretty decent consolidation there for quite a few months. Then we had a nice clear out move, and here we are back below this 150s floor that it held. And it's been a couple of pretty aggressive days of selling, and here we are, down to low 108s or so, kind of holding this previous gap from October, November of last year. So I think for me, what I'm watching for today is any sort of capitulation move out of the open, some sort of a flush. Like I said, on a higher time frame, maybe undercut these 104s, even if it dips into the double digits. What I'm looking for is some sort of undercut and then a higher low to risk off of. I think there are a lot of charts today that are in a similar position. I'm also looking at CVNA is another one that's coming into some near key support areas. So between both RDDT and CVNA and Carvana, I'm looking for a similar setup, some sort of a capitulatory move out of the open, and then look to play the bounce for off of a higher low. Just looking around today, everywhere on social media, just some trader groups and friends, etc. A lot of people are looking for a bounce. So oftentimes that may not come. So I'm always keeping an open mind for that possibility as well. With a name like Tesla that has had pretty aggressive selling over the last several sessions, even though it may be due for a bounce, I'm always cautious in determining when exactly that day will be. I would much rather be a couple bucks too late and have a lot more inventory behind me that I can risk off of versus trying to time a bottom and then end up being $10 to $15 too early. That's probably one of the worst cases. And then sure enough, a bounce does come thereafter. So that is going to be the back of my mind throughout all tickers today, even if I'm looking for a bounce. Also, keep an open mind that timing the market is not a long-lived strategy. So that's CVNA, Tesla, and RDDT. Essentially, I'm looking, those three tickers, similar moves, some sort of a flush off the open, and then look to base risk off of a higher low. As far as some of the smaller caps, the one that comes to mind, Nate mentioned it briefly, ONDS, essentially. So this thing, let it do its thing, let it exhaust. It's clearly in an uptrend so far. So I don't mind, picking up the pieces when and if this has a blow off move, maybe speeds up a little bit out of the open, clears out, and then fails to follow through. And the other small cap was this AWH, which I also believe Nate mentioned. And that one just reminds me similar to this STSS chart a little bit, how it started in the morning yesterday. So I will be looking for something similar. So ideally, this doesn't just fail. Ideally, we shove into maybe the 40s, clear out this pre-market highs, 44s, 45 cents or so, and then look for a fail to follow through momentum. And that's pretty much it for me for today. Again, just make sure that you have a concentrated risk exposure and some key levels to base risk off of. And with that, back to you, Sam.
Fantastic. Thank you, Stan. Thank you, Nate. And thank you, Ariel. Thank you to everyone who tuned in today. As Nate said, we are currently running a 2-week trial. Link is in the description. Whether you're on X or YouTube, you'll be able to see it, and there'll be tons of retweets. I don't know if Nate mentioned it, but it is just for today only as well. So don't waste any time. And the other advantage is obviously the plans that these guys have laid out as well. They'll be updating them through chat and through Momentum all day as well. So there's no better time to sign up. And if you've got any questions, please feel free to email me, sam@investunderground.com, or on Twitter @TradesTurbo. And I'm sure that's the same with all the guys. So thank you so much for tuning in, and trading well today, guys. And we will see you all in the room.